All right, so recently I did a video on the state of our economy, the Ghanaian economy. And in that video, I made mention that our current finance minister, Honorable Kelsey Forson, is doing really well. I mean, I had a lot of comments, people asking me questions, and this not so. No, it's very difficult ministry, right? The Ministry of Finance and the managers of the economy, so the economic management team. It's a very tough ministry and area to handle. And like I said, and our current finance minister is doing something good that we need to study. And I'm saying this because if you've not really studied economics and you don't understand what is going on, you think it's just all about one side issue. So I have money in my pocket, I have to go and buy something. And as far as I'm able to buy more, that means the prices of goods are coming down, I'm okay. No, an economy is not just consumers, it's made up of suppliers, all right? Somebody must sell and somebody must buy. So we have the supply and demand, which will interact to form what is called equilibrium. Now, determining this equilibrium, right, the appropriate equilibrium point, which then reflects the power of your currency, is the most trickiest part. It's really difficult to get it. And let me tell you, so you hear those of you who are reading Financial Times and things like that, you say the economy is heating up, right? Then they start saying the economy is overheating. What does it mean? When the economy is heating up, it means economic activities are picking up, right? People are now able to purchase things, people are now able to supply things, right? But if people are now over purchasing, what does it signal? It means a lot of money and resources are floating in the system such that a lot of money are chasing few goods, right? And when you have this situation, prices start to rise rapidly. More or less, you hear it in other terms, we call it inflation. So when you begin experiencing a sustained price increase over a period of time, and sometimes the rate of the price increase starts itself increasing, then you are getting what is called trouble inflation. I mean, you are going to collapse your economy if you don't do something about it, right? So it means prices get out of hand. So if you used to buy something, let's say in the Ghanaian context, 10 cedis, with the inflation, you can buy that thing 10 cedis in the morning, you go in the afternoon, that thing shifts to 15 cedis. In the evening, it hits 25 cedis within that same day. That means inflation is getting out of hand. And we experienced such things or similar within the last administration, where prices, if you go to a place and they give you the price, you better buy it. That because if you turn around and turn back, the price have already increased. So we were in that burdensome inflation. Now, if you manage to bring inflation down, meaning the prices of goods start coming down, then you are also trying to cool down the economy, right? You are cooling the economy. But you don't want to cool the economy so much that it becomes cold. We call it deflation, the opposite of inflation. Okay? The opposite of inflation is called what? Deflation. So when we say the economy is cold, that means you are almost in a recession, or you are in a recession. What does that mean? It means a sustained price reduction over a period of time. Now, if prices are reducing, you went to buy something in the morning and the price was 10 cedis. You go in the afternoon and it's 5 cedis. Then you go in the evening, it's now 2 cedis, right? You see what I'm talking about? Then we are having a situation called deflation. Now, if you are a rational consumer and you experience such a thing in your country, will you buy anything? No. It's prompt like, let me wait. Prices are going down. So let me not buy. If I wait a bit, 1 day, 2 days, 3 days, I'll be able to get that thing, that bundle of things that I want, a lot with very few cedis, cheap. Now, if all of us consumers start behaving like that, you are again hurting the economy, because suppliers who bought the thing at a higher price and are waiting for you to come and buy so that they can also make margin are what? Losing money. So these suppliers will not, because they are also rational, they will not then pick up the little money that to go and buy more things for them to lose more value. So you see that what will happen at the end, there will be nothing in the economy, because suppliers are also rational. Then all of a sudden you jump from deflation to rapid inflation. So you have this. Why? Because nobody is supplying things, so the little that is left starts attracting higher prices, right? A lot of people then suddenly chase the few around because they want to save themselves. So getting that equilibrium point where you are not in a situation of inflationary or deflationary is very tricky, because an economy must take care of both its imports and exports. And that is also a function of how your currency is also behaving and what you are doing within your economy. So the minister must get this right, using all the parameters that he got and daily estimation. What is the rate? Are we moving? Are we moving upwards or downwards? Because you have to take care of the country must be able to sell things outside. So you don't want your cedi or your currency to be too expensive, right? If it's too expensive, nobody will buy your things. So your economy will eventually collapse, because factories will close down, because the things that are produced in your country are too expensive. And so they will buy it from alternative countries that your country industrial system will collapse. The opposite is also true. If your goods become too cheap, it means you are giving your produce and your raw materials also too cheap to the outside, and you have to produce more. You have to get a lot of cocoa in order to get some few money into it. So you have to gauge what is the strength of my currency. How do I manage not to get over inflationary or over deflationary? And that's what I was saying in the previous video, that gauging that stable midpoint and not allowing the currency to fluctuate above the upper threshold or the lower threshold is extremely difficult, that balancing act. And we saw it in the previous, they used 8 years, they commissioned committees, and they couldn't get it right. So our current Minister of Finance and the head of the bank, the central bank, and other actors that are helping him, they are doing extremely well. You realize that narrow path has been sustained in the past 8 months, where at the point that we are getting to the upper threshold, where the cedi is moving towards 13, it starts falling towards 12, 11, and when it goes below 10, getting to the 9, it starts moving up again. So they want to keep it right now in that narrow range between 10 and upper 12. So between 10 and 12, right? They want the cedi to fluctuate between this narrow range. When it happens that way, it's good for both the consumer and then the supplier. Why? Because they are able to forecast. They are able to know that if I bring my goods and they take the upper threshold, if I use 1 to 12 cedis to bring the goods, I can make this margin. And then the consumer is also able to gauge, if I save or if I want to buy, they will use both the upper and the lower margins to do their estimation. So the consumer will not unnecessarily wait. They go to the market, they know that prices is not going to fall below, and it's not worth their time for them to wait. So they will buy the goods. If they buy the goods, the person selling it will get the money, will go and bring in some good. That person who bought the good is also going to use it to produce something in the economy to sell, so that we have the supply and the demand curve moving within that narrow range. It is good. We call it economic stability or stable economy. Now, stable economy doesn't mean stagnation. It means things are not spiking too out of hand to make management and planning out of hand. It means you can grow within a stable economy. You can grow, meaning the midpoint is growing and is good for both the consumer and the supply at the same time. So you can have a growth, the economic growth, where you have managed to stabilize your currency, or you've stabilized forecasts, or you've stabilized certain things within your economy. And I'm telling you again that it's not easy to get these things right. First and foremost, to get these things right, there must be some sort of credibility. And this credibility are gauged by people like us, people with some economic sense, some financial management sense, business people who knows how to gauge what is going on within the economy, right? So now that there is some confidence and belief that these managers are good and they've studied the trend in the past 8 months and are using it to forecast what's going to happen, indeed that forecast become reality, it's bringing confidence. Then investors, suppliers, people who are producing things, if this continue like this, indeed I'll be able to make this margin. So it's worth me investing in this machine to produce more of this, right? And the consumer will also say, yes, I don't have to wait. I mean, I think I can buy my pack of cement or whatever this. So then the economy start to grow, but it's not growing out of hand, like spiraling out of hand, right? So you don't want your economy to overcool, but you have a sense when it's overheating, you have to bring some cold, you have to pour some cold water on it so to cool it down a bit. But when it's also cooling over, you have to bring in some hot water so that you also bring it to the warm the water a bit. Governments and the finance minister, like I said, you have to use both monetary policy tools and fiscal discipline policy tools, right? The fiscal policy tools to see how do we push money in and how do we draw money out of the economy. And in pushing money in, are we pushing the money towards what we call the growth that we want? So specific infrastructure that is going to stimulate economic growth, the road sector, the agricultural sector, the security sector, those kind of things. And when things start overheating, they want to pull the money, so they start increasing the treasury bill rate, bond rate, those kind of things. So for money to move out into some, so that to cool down, less money available floating to cool down the economy. So you don't want to overdo each of these things, right? And those people, it's just like, I'm not a pilot, but you cannot have a pilot turning the wheel up and you will rotate and you'll crash. You have to have a feel that if I want to rotate 1 degree to the left, how do I turn? What degree to the right? So you have to have that feel, because if you don't do it, you're going to crash and you're going to mess up the economy. If you turn too much to the left or turn too much to the right, you have to have the horizon, and this take experience. And that is what I said in the first video, that our finance minister and the economic managers currently, they are doing real good things. All right, so kudos to what they are doing, and I hope with this video I'm able to explain to those who were asking they didn't get the first video. I hope I've been able to explain it a bit more. Yeah, I've been able to explain it a bit further to you guys. All right.